Money has taken many forms over time, but none has shaken the world quite like Bitcoin. From an anonymous creator to billion-dollar fortunes, the story of this digital currency is as mysterious as it is revolutionary. In this video, we're breaking down the fascinating history of Bitcoin, from its secret origins to the global phenomenon it is today. And trust me, what happened in 2010 will blow your mind. Before we dive in, don't forget to like, subscribe, and tap the bell. Because in the world of money and technology, the biggest surprises are often just one transaction away. When was the first Bitcoin created and how? The story of Bitcoin truly begins on October 31, 2008, when a mysterious figure using the pseudonym Satoshi Nakamoto released a white paper titled Bitcoin, a peer-to-peer electronic cash system. In this 9-page document, Satoshi laid out a vision for a brand new kind of money, one that would exist entirely online, without relying on banks, governments, or any central authority. It was designed to let people send payments directly to each other, safely and securely, without the need for middlemen. A few months later, on January 3, 2009, Satoshi mined the very first Bitcoin block, now famously known as the Genesis block, Block 0. Hidden within its code was a short but powerful message. The Times 03/Jan/2009 Chancellor on brink of second bailout for banks. This reference to a British newspaper headline about the 2008 financial crisis wasn't random. It was a deliberate statement. It showed that Bitcoin was created as a direct response to the instability of the global financial system and the over-reliance on banks that required repeated bailouts. The technical process that powered Bitcoin was called mining. To create new Bitcoins and verify transactions, computers had to solve extremely difficult mathematical problems. Satoshi's own computer carried out the very first of these calculations, securing the network and producing the reward of 50 Bitcoins. What was the first Bitcoin transaction? The first recorded Bitcoin transaction occurred on January 12, 2009, when Satoshi sent 10 Bitcoins to cryptographer Hal Finney. Finney, an early Bitcoin enthusiast and developer, had downloaded the Bitcoin software and was helping test the network. This historic transfer proved that Bitcoin could actually function as intended, moving value from one person to another without intermediaries. However, the first commercial Bitcoin transaction that established real-world value happened on May 22, 2010. Programmer Laszlo Hanyecz paid 10,000 Bitcoins for 2 Papa John's pizzas, valuing Bitcoin at roughly 0.004 cents each. This date is now celebrated annually as Bitcoin Pizza Day, marking the first time Bitcoin was used to purchase physical goods. Those 10,000 Bitcoins would be worth hundreds of millions of dollars today. These early transactions were crucial because they demonstrated Bitcoin's utility beyond just being a technological experiment. They showed that digital currency could facilitate real economic activity and begin building the foundation for Bitcoin's eventual mainstream adoption. Why is Bitcoin so expensive? Bitcoin's high price results from several interconnected factors that create scarcity and drive demand. First, Bitcoin has a hard cap of 21 million coins that can ever exist. This programmed scarcity means that as demand increases, supply cannot expand to meet it, naturally driving up prices. Currently, over 19 million Bitcoins have been mined, leaving fewer than 2 million yet to be created. The halving mechanism further increases scarcity. Every 4 years, the reward for mining new Bitcoins cuts in half, reducing the rate at which new coins enter circulation. This event typically triggers significant price increases as the supply shock meets continued or growing demand. Institutional adoption has dramatically increased demand. Major corporations like Tesla, MicroStrategy, and Square have added Bitcoin to their balance sheets. Investment firms now offer Bitcoin funds, and payment companies like PayPal allow Bitcoin transactions. This institutional embrace has legitimized Bitcoin and brought massive capital inflows. Bitcoin's growing recognition as digital gold attracts investors seeking inflation protection and portfolio diversification. In countries with unstable currencies or restrictive financial systems, Bitcoin serves as a store of value and means of economic freedom. This global demand from both individuals and institutions continues pushing prices higher. Where could Bitcoin go in the future? Bitcoin's future is shaping up to be one of the most transformative financial evolutions in history, with immense potential across multiple dimensions. On the technological front, innovations are rapidly addressing Bitcoin's earlier limitations. The Lightning Network, for example, is already proving its worth by enabling instant, near-zero-cost Bitcoin transactions. This scalability solution allows Bitcoin to function not just as a store of value, but also as an efficient medium of exchange suitable for everyday purchases, something critics once argued was impossible. In addition, developments like Rootstock, RSK, are extending Bitcoin's utility by introducing smart contract functionality, allowing it to compete with other blockchain platforms that have traditionally been known for programmability. This could open doors to decentralized finance, DeFi, tokenization, and many new applications built directly on top of Bitcoin's secure network. From a regulatory perspective, greater clarity is emerging worldwide. Countries such as El Salvador have already recognized Bitcoin as legal tender, setting a precedent for broader acceptance at the national level. Meanwhile, major economies are developing structured cryptocurrency regulations that aim to balance innovation with investor protection. As these frameworks mature, they will likely enhance institutional confidence in Bitcoin, leading to greater adoption among banks, hedge funds, and corporations. Such regulatory legitimacy also has the potential to ease concerns about volatility, manipulation, and legal risks, making Bitcoin a safer and more appealing asset for mainstream investors. On the macroeconomic side, global conditions increasingly favor Bitcoin's long-term growth. Governments across the world are printing record amounts of fiat money to fund deficits and stimulus programs, raising fears of inflation and currency devaluation. In this context, Bitcoin's fixed supply of 21 million coins stands out as a unique hedge against monetary debasement, an alternative form of digital gold for individuals and institutions seeking financial security. Furthermore, the rise of central bank digital currencies, CBDCs, may actually strengthen Bitcoin's case. While CBDCs centralize control of money, they simultaneously highlight the importance of having decentralized, censorship-resistant options like Bitcoin. When it comes to price predictions, estimates vary widely. Conservative analysts foresee Bitcoin eventually stabilizing at levels like $100,000 per coin, while more optimistic forecasts project valuations surpassing $1 million. These predictions are speculative, but what remains clear is that Bitcoin's core value propositions, sparsity, decentralization, transparency, and borderless usability, continue to drive long-term demand. Unlike traditional assets, Bitcoin's growth potential is not tied to the performance of any one nation or economy, but rather to the global appetite for a truly independent financial system. From underground forums to Wall Street headlines, the rise of Bitcoin proves that the future of money is never predictable. What part of Bitcoin's story surprised you the most? Drop your thoughts in the comments. I'd love to hear your take. If you enjoyed this deep dive into crypto history, hit like, subscribe, and share this video with someone curious about digital money. Until next time, stay curious, stay informed, and never stop exploring the stories that shape our future.